We'll call this meeting of the Retirement Board of Allegheny County to order. And the first item of business is to stand for the Pledge of Allegiance if you're able to stand.
I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Next, Manager Szymanski, could you take a roll call vote? Or roll call?
Yes. Corey O'Connor,
Amy Wise here on behalf of Corey O'Connor.
Sarah Monrado, Frank DeCristofaro, Kimberly Joyce,
Present.
Jennifer Liptak, Sarah Roca, Erica Roque-Bruslers.
Present. Do we have any public comment?
We do not.
Oh, the next item is the new president's update. We held executive sessions on August 19th, 2024, beginning at 11 a.m. to consult with our attorneys regarding information and strategy in connection to anticipated complaints and pending litigation, including the case filed as GD 24-9033 in Allegheny County Court of Common Pleas. Additionally, we held an informational session on September 11th at 1 p.m. And then I have a few other updates. During the July Retirement Board meeting, I had asked Manager Szymanski related to plan funds held at FNB, and we had a little confusion between us. After the meeting, we discussed it further. The historic and current process is for biweekly employee-employer contributions from the county and the airport to be directed to one of the retirement plans to FNB checking accounts. Historically, these accounts have been zero interest checking, though we recently moved them to a 4% sweep. In discussing with the manager as well as our consultants at Mariner, we believe a better fit would be for the funds to be deposited directly to BNY Mellon's custody. So we're working with the plan manager and the controller's office on that. Additionally, it appears that historically the checking accounts for the retirement plan were handled under the treasurer's office banking contracts. And upon discussion with the manager, Mariner, and our solicitor, we'll work to separate that out under the next contracting cycle, which is next summer. So that the board has full decision-making control of the institutions that hold the custody for all the retirement system funds. Over the past 2 months, the manager, the board president, and the board have received an increased number of inquiries as to the funded status of the retirement system and its long-term solvency. I want everyone to be aware that every request is being answered in a consistent and timely manner. The board is working with the actuary, the consultants in the county to everything we can do to make sure the plan is funded in perpetuity. The Bylaws Committee met on September 13th. This ad hoc committee consists of Member Roca, Deputy Controller Wise, and me, and was joined by Brian Gabriel and Manager Szymanski. We made great progress in a 1.5 hour meeting, and we expect to meet once more before our October meeting to finalize and circulate revised copies of the draft bylaws. Our contract with Phase 14 that provides outsourced disability reviews is up at the end of this year with an option for a 2-year renewal. Manager Szymanski and I will be doing a site visit with them next Friday, September 27th. If any board members want specific information requested or questions raised as part of that process, please feel free to reach out to us before then. Also, Chief Deputy Treasurer Liz Tishon and I met with our actuaries, Brad Rigby and Todd Kordecki at Acrisure in August for a meeting to gain a deeper understanding of some factors that have led to the current underfunded situation. We're working on rolling this into presentable materials over the coming months. That concludes my long update. Next, we have board approvals. I'm looking for a motion to approve the board meeting minutes from July 18th, 2024.
Make that motion.
Hearing a motion in a second, is there any discussion? Hearing no discussion, let's vote. All in favor, say aye. Aye. Any opposed? Motion passes. Next, looking to entertain a motion to accept the financial statements, which include the pension fund assets, the statement of changes in plan net assets, and the RBAC balance sheet for June and July 2024.
Make that motion.
Second.
Hearing a motion and second, is there any discussion? Hearing no discussion, all in favor, say aye.
Aye.
Aye. Any opposed? Hearing the motion passes. Next is, and this is because we didn't have a meeting in August, we'll have a couple items to ratify. So I'm looking for a motion to ratify the approval of the August 2024 invoices in the amount of $285,647.27.
Make that motion.
Second.
Hearing a motion in a second, is there any discussion? Hearing none, all in favor, say aye.
Aye.
Any opposed? The motion passes. Looking for a motion to approve the September 2024 invoices in the amount of $31,160.03 and submit for payment.
Second.
Hearing a motion in a second, is there any discussion? Hearing none, all in favor, say aye.
Aye.
Any opposed? The motion passes. Next, we have retirement applications. Motion to ratify the approval for the following, sorry. Motion to ratify the approval following the August 2024 applications, which included 10 early voluntary and full retirement. Do we want to do this one as a roll call? We're going to do this one as a roll call vote.
Ms. Liptak? We're going to roll call vote the retirement applications for August and September.
Yes.
Ms. Weiss?
Yes, with the exception of no for retiree number 20291.
Ms. Brusslers?
Yes.
Mr. DeCristofaro?
Yes.
Ms. Roca?
Yes.
Ms. Joyce?
Yes.
Do you want me to take the next one?
Oh, we didn't call for, I'm sorry, I apologize for that. We didn't call for discussion before it. Is there any discussion? I'm
Yeah,
sorry
just
about that.
for clarification, the controller is voting no on this one retiree. They are retiring from their service at the airport, so we are unaware whether there are discretionary bonuses included in the calculation of the pension, and it is the preference of the controller to approve only pension benefits exclusive of, not including discretionary bonuses while the matter's under litigation.
Just want to confirm for, through the manager and the solicitor regarding this issue, that we have a, I would say requirement to, vote for the pensions as is. But if there's any recalculation that needs to be had, will that recalculation be done and be done according to whatever rule, law, order, et cetera, that happens within this particular case?
Yes, and it would be brought back to the board as a recalculation, depending the litigation.
And if said calculation resulted in a reduction in pension, would that individual then be required to pay back the system?
Yes.
Okay, and that process would be?
Our process typically in the office would be if there is an overpayment, we withhold from future payments or give them the option to pay the money back as whole.
Thank you. That's why I feel comfortable with the vote I took. Thank you.
Any other discussion? All right, sorry about that one being out of order. Are we ready for applications B? I'll say yes, yes. Okay, motion to approve the following September 2024 applications, which included 7 early voluntary, 21 full retirements, 1 payment plan.
Ms. Liptak?
Oh, sorry, we need
Sorry.
to do it. Sorry,
Sorry.
can I have a motion and then a second?
Motion?
Second.
And then do we have any discussion? Is it comments from before carry forward?
Yeah, and similarly, to be consistent, the controller votes yes for all applicants, with the exception of 2 retiree, both with service at the airport, retiree number 20307, and retiree 20325.
Yeah, okay. Any other discussion? Oh, yes, Jen, Ms. Lituk.
Thank you. I'd like to reiterate and have Walt reconfirm what I asked before, whether the calculations at this time are correct, which I didn't ask before. And if there's any recalculation, I'll come back to the board and there'll be repayment back to the system if it wasn't done properly, or if we're told to do it otherwise by an order, et cetera.
Correct.
Thank
We
you.
will do that.
Any other discussion? All right, we'll take a roll call vote.
Ms. Liptak?
Yes.
Ms. Weiss?
Yes, with the 2 exceptions noted previously.
Ms. Brusslers?
Yes.
Mr. DeCristofaro?
Yes.
Ms. Roca?
Yes.
Ms. Joyce?
Yes.
On to reports. Next, we have our manager, Walt Szymanski.
Thank you very much. If you turn to your manager's report tab, I'll highlight some areas on the dashboard. Then we have some board action items. So retiree payroll is up 3.87% from the prior month of last year. Payroll was at $12,097,799.20. Contributions are actually climbing. Contributions are up 16.15%. Total retirements on the year are up 26.67%. Pension estimates are down right now, 1.99%, and that could be too with the online portal being down for a time there. Capital calls are down 15.14%, and then capital calls as of the prior board meeting were $934,349.84. Are there any specific questions on the dashboard items? No? Okay. So with that, then I'll move to the board approval section. In your confidential packet, you would have received appeal number 2024-2, and we are requesting the acceptance and vote on appeal number 2024-2, in which the board, having received and reviewed a report and recommendation, vote on whether to approve and adopt the findings, conclusions, and recommendation of the hearing officer in appeal 2024-2, thereby denying the appeal.
Do we have a motion?
Make that motion.
And a sec, do we have a second? Hearing a motion and a second, is there any discussion? Hearing no discussion, we will take a vote. All in, sorry, I should look at the agenda page. All in favor of accepting appeal number, the findings and conclusions of recommendation of the hearing officer in appeal 2024-4, thereby denying the appeal, please say aye.
Aye.
Aye. Any opposed? Hearing none, the motion passes.
Okay, thank you. Next item on the agenda is a motion to terminate the contract with Asset Strategy Consultants with an effective date of October 31st, 2024.
Make that motion.
Second.
Hearing a motion and a second, is there any discussion? Hearing none, we'll take a vote. All in favor of terminating the contract with Asset Strategy Consultants effective October 31st, 2024, please say aye.
Aye.
Aye. Any opposed? The motion passes.
Next item on the list is a motion to terminate the contract with PFM Asset Management, also with an effective date of October 31st, 2024.
That motion.
Any seconds?
Second.
Hearing a motion and a second, all in favor of terminating the contract with PFM Asset Management effective October 31st, 2024, please say aye.
Aye.
Any opposed? The motion passes.
All right, next item on the agenda is a motion to amend and enter into contract with Mariner Institutional to include the private equity emerging manager portfolio at a cost of $150,000 annually, with a start date of October 1st, 2024, and an end date of December 1st, 2026, that this runs current with their current contract for the entire portfolio.
Would anyone like to put forward the motion?
Make that motion.
Second.
Hearing a motion and a second, is there any discussion?
I just want to make sure that the process used for this amendment followed all of our rules, procurement rules, et cetera.
Yes.
Thank you.
Thank you, Member Liptak. Any other discussion? Hearing no discussion, all in favor of a motion to amend and enter into contract with Mariner Institutional to include the private equity and emerging manager portfolios at a cost of $150,000 annually, with a start date of October 1st, 2024, and an end date of December 1st, 2026, say aye.
Aye.
Any opposed? The motion passes.
All right, next item on the agenda is a motion to approve the RFP for the tax reclaim services and have the RFP posted to the county's purchasing website. Once this is done, we can arrange who will receive the RFPs that come in and grade them and so forth.
Is there a motion?
So moved.
And hearing a motion in a second, is there any discussion? I have one item. I'd just like to thank Walt. This is, I think, the first time we're working with the county
Yes.
purchasing department. So we're hoping for a process that's be a little less paper-based with using the system that purchasing has. So I think that's a nice move for the retirement board and retirement system. And any other discussion? All in favor of a motion to approve the RFP for tax reclaim services and have the motion posted to the county's purchasing website, and have the RFP posted to the county's purchasing website. All in favor, say aye. Aye.
Aye.
Any opposed? The motion passes.
All right, thank you very much. And lastly, just a board update, our new online calculator went live on September 6th of 2024. So far, we're receiving some decent feedback. We are still working with the courts and the airport to open their IP addresses so that those employees have access. But currently, we do have an online kiosk in our office that they could come in and use until that's completed.
Is it just on an intranet?
Intranet, yeah, you have to log in from a county computer in order to access it.
At what point will be a outward-facing?
Once we clear that with IT, so security protocols, we want to make sure what can be offered outside of the county's intranet. So we're working on that.
I apologize. I should have asked you if I could ask a question.
It's good. We're good.
It'll be a few.
As
it's-
a non-employee, I just wanted to make sure that I, at some point, could have
Yeah.
access, and Frank, maybe Frank and I want to be able to see stuff, right?
Yeah.
We appreciate the representation by non-employees.
That's right.
And that's all I have this month.
Are there any other questions or items for Walt? All right, thank you.
Thank you.
On to the solicitor's report, Brian Gabriel.
Thank you, Erica. I have 3 action items, all on the agenda, all relating to class actions and recommendations from our class action council. The first is a motion to authorize Bernstein, Litowitz, Berger, and Grossman to include the Allegheny County Employees Retirement System as a signatory to amicus briefs that they will file in the NVIDIA Corp. And Facebook cases that are pending before the Supreme Court. And just as a point of reference, this is in the solicitor's report on page 2 under number 1C. And there's also an attachment to this month's solicitor's report that sets forth BLB&G's explanation of the request.
I see folks looking. Do we want to do a motion?
Make that motion.
There's a motion and a second. Is there any discussion or questions for the solicitor on it? Ms. Libtack?
I know, I'm like on fire today. We're not the lead on this, are we?
No, actually, this is not participating in the litigation like you're ordinarily asked to do. This is a no cost, just signing on to briefs that
A
are
brief, okay.
by institution. They line up institutional investors to underscore the importance of the issue to the Supreme Court. So other municipal, state pension systems, for example, will be on there, and so we would be one.
There are others that have signed on?
Yes, council actually sent a list this morning of several, which
Okay.
I'd be happy to share, but yes.
Thank you.
Any other questions or discussion? Seeing none, let's take a vote to authorize, this is acronym and word heavy, BLB&G to include the ACERS as signatory to the amicus brief that they will file in the NVIDIA Corp. And Facebook cases before the Supreme Court. All in favor, say aye.
Aye.
Any opposed? The motion passes.
Item number 2, as a point of reference, starts at the bottom of page 5 of the solicitor's report under section 6A. It's the Johnson & Johnson litigation demand. This was something that was approved in August when we did not have a meeting, and so this is a request for authorization, or I'm sorry, to ratify the authorization given to Grant and Eisenhofer to submit a litigation demand on Johnson & Johnson.
I'm looking for a motion to ratify the board's August approval of the authorization for GE to submit a litigation demand on Johnson & Johnson.
That motion.
Second.
Hearing a motion and a second, is there any discussion or questions for Brian? I see member Liptak's at the ready. Oh, no, she's not. Okay. Anyone else? All right. Hearing no discussion, we'll vote to ratify the board's August approval for the authorization for G&E to submit a litigation demand on Johnson & Johnson. All in favor, say aye.
Aye.
Aye. Any opposed? The motion passes.
The third and final item you can find on page 7 of the solicitor's report. It's subsection C, also under shareholder and class action litigation. This is a motion to ratify the board's August approval of the Rosen Law Firm's proposed settlement of the action filed against Stronghold Digital Mining, Inc.
Can I have a motion?
Motion.
Hearing a motion and a second, is there any discussion? Hearing none, all in favor to ratify the board's August approval of the Rosen Law Firm's proposed settlement of the action against Stronghold Digital Mining, Inc., please say aye. Aye.
Aye.
Any opposed? The motion passes.
The solicitor's report is current as of September 12th. I do not have any items to bring to the board's attention outside of that report, but I'd be happy to answer any questions.
I think that, seeing no questions, thank you.
Thank you.
Next up, for consultants, we have Tom Brokaw and Tim Walters from Mariner.
Thank you. If you can move forward, we have an extra report in here. So if you move forward to page 17, if you look on the bottom left, page 17, and go one page forward, and you'll see the agenda. All right. So we have...
Please hold.
God bless you. So we have
This is
first...
of 101. We're looking at the right report.
That's right. Page 2 of 101.
So you want us at page 2 of 101?
Correct, ma'am.
Okay, we're still looking. All right, we're ready.
All right. So starting on page 2 and actually giving you a flash forward to today at approximately noon, the last time that I looked at my phone. If you've been watching the news this morning, the Federal Reserve yesterday cut interest rates by 50 basis points. And this morning, I guess it took a while for the market to digest things. This morning, the markets are up across the board about 2%. So that is good news, and that's very recent. The report itself, if you look at page 2 of 101, is as of August 31st. And when we look at the monthly returns, the S&P 500, I'm looking at the top left, was up almost 2.5%. Small cap Russell 2000 was down. Now that there's more clarity with interest rates, it seems that small cap is also performing well and in line with the large cap, and that potentially the market isn't all about the Magnificent Seven large cap equity growth stocks, but may be broadening out. But through the end of August, the story continued to be large cap growth leading the way. And you can see that if you look at the bottom left in the year to date, the chart at the bottom left, information technology up 27%, communication services up 23%. So through August, those sectors which include the Magnificent Seven that we've mentioned before, have continued to drive the market forward. Again, subsequent activity in September, it looks like the market may be broadening out. So that's where we are through August. The latest report that we have for your portfolio is on page 4 of 101. And on page 4, you see the performance through July 31st. In the month, portfolio was up 1.18%, and year-to-date, 4.67. Those returns are really driven by, if you look down the page, U.S. equity up almost 11%, non-U.S. up almost 6%. So those two parts of the portfolio experiencing the best returns and contributing the most to the year-to-date performance, 4.67. When we look at bonds in the month up 159, year-to-date 2.35. Bond portfolio is a bit less volatile than the market itself. During the month of July meant that the portfolio was a bit behind the benchmark, but when we look at the year-to-date, which includes a lot more volatile periods, fixed income performing well. High yield in line with the benchmarks. When we go to the next line, private real estate ahead of the benchmark for the year-to-date period. And when we look at your portfolio, there's a couple of holdings in there, Washington Alliance, two different funds. Their exposure, government office space and not the generic office space being punished due to the, let's say, back to office policies that are maybe not exactly as back to office as we would hope. But office continuing to lag the market in general, and your portfolio having limited exposure there, outperforming. Infrastructure, ports, power, transportation, income from those investments supporting the year-to-date returns, 2.9%. Private equity, we've discussed private equity before, some more limited activity and liquidity in private equity due to period of rising interest rates over the past couple of years. Moving forward, we would expect, especially with interest rates falling, that there could be more liquidity in your current portfolio, more distributions. Liquid policy portfolio performing in line with the benchmark. And the cash account, quarterly distributions in July lifted those balances. We're using the cash to pay the monthly distributions from the plan. So now those balances are declining more towards the monthly requirement, which is around $6 million. So that's the summary of the performance through July. I'd be happy to answer any questions. One page, so there are 101 pages. One page that I did want to point out, and just why are there 101 pages? I included the quarterly report that's more expansive than the monthly flash report that we discuss at most meetings. If you turn to page 38 of 101, I do want to point out an addition to the report that we have here on page 38 is a summary showing the active managers, public markets active managers, and The comment section, in the two cases where you see comments, they're related to quantitative metrics, but we are also looking at these managers from a qualitative perspective as well. And the one that I do want to call out is Bailey Gifford International, underperforming the benchmark and median over 1, 3, and 5-year time period. So Bailey Gifford, we met with the manager in the quarter, and looking at their performance, they've been in your portfolio since going back to the early 2000s. They have a good long-term track record, and within that track record, they've been behind the benchmark 2 years in a row, twice, and 2 of those years are 2021 and 2022. And that is after tremendous outperformance in 19 and 20. Their style is a growth style of management, and the international market, developed international market, has been led the last couple of years by value-oriented managers. So they are on the watch list. We will continue to monitor them, meet with them, get feedback, and the way that the new policy works, we have to come to a conclusion within 12 months of going on the watch list, and we will report back.
Thank you. Are you going to talk about the monitor or no?
I'm sorry?
Are you also going to talk about the monitor
Sure.
on the page?
That manager, Federated High Yield, the difference between watch list and monitor, the watch list 1, 3, and 5 years, monitor 1 and 3 years. Federated, the high yield portfolio, has less volatility than the market. The high yield market has been performing very well. They protect in down markets, so in this period of the last 3 years, they're lagging the benchmark and the median slightly. If and when the market declines, we would expect them to outperform. So we're going to continue to monitor them as well and report back our findings, and certainly if anything changes.
And this is the first quarterly one of these since we put in that addition to the policy, right?
That is correct, yes.
This is very exciting. Good team. Are there any questions on this? Thanks.
Thank you. That's all of our prepared remarks. If you have any questions, we'll be happy to answer.
I have a question. This report includes a whole lot of these quartile-looking pages with blue and dots.
Yes.
Could you walk us through just one of those, how to
Sure.
read that and what it means?
Thank you. Bailey Gifford is probably a good example. So if you go to page 62
That's the one I was on.
of 101, you can see the, if you look at the right-hand side, and this shows page 62 of 101. If you look at the right-hand side, this shows in, well, not quite black and white, blue and darker blue, the commentary that I had mentioned earlier. When you look at 2019 and 2020, so again, right-hand side down towards the bottom, you can see the significant outperformance relative to its index. In 2019, 32 versus 21, and in 21, 26.
And that also shows up as the blue dot being higher up than the gray dot and being above the middle? Is that?
Yes.
Okay.
So the way to interpret these charts are the shaded area represents the distribution of return for that time period. So on the left-hand side are annualized returns. On the right-hand side are calendar year, individual calendar year returns. So if you look at just the far right side, in 2019, looks like the highest returning manager within that international universe returned somewhere around 35 or maybe just north of 35%, with the lowest performing manager somewhere maybe close to just above 20 or 19. And then the different shades represent quartile distributions. So the computer thinks how many managers are in the population and then divides it equally into 4 representative quartiles, 1 being the best, 100th being the worst. So using that far right example, Bailey Gifford performance landed them in the 21st percentile of their peer group universe. Conversely, 2021, they were in the 95th percentile. So that whipsaw of performance is what's causing them to be on the watch list.
Thank you.
My
Not my question.
interpreter worked very well. Thank you, Tim. So that's really how these pages work. You can string together longer term time periods, so you're not just looking at one particular number or one particular endpoint. It can be very sensitive. If we were sitting here 3 years ago, they're the best manager in the world, and now they're the worst manager in the world. No, they're going through a cycle.
Thank you.
Thank you.
Anything else for Chris and Tim? All right, let me see what's next. Next, we have Ed Boyer from Asset Strategy.
Thank you. Good afternoon.
Good afternoon.
All right, so under our tab with Asset Strategy Consultants, we start with, there's two reports blended in here. The first section shows the managers that we were responsible, for the most part, of sourcing and seeking approval. The exception to that was partly in real estate, where Valstone was already there and subsequently requested other allocations, and they were very adversely impacted by the pandemic because they couldn't move new residents in or out, and adult children were keeping their parents at home, and they were not putting them in the Valstone senior care centers. But if you look at the buyout section and you go to the right, the net IR there is 18.12. The growth equity below that is 20.75. And so what we do, and you'll see that in the October public market equivalent study, is most of these reports show that we've added value of over about 900 basis points over a public market. The exception to that would be private debt, which has a lower hurdle, and there we would generally try and achieve a 3 to 5% or 300 to 500 basis points in excess return for the given up liquidity. I think you'll see that to be the case in that report. In the secondaries, in the bottom two, at 13.5, they do just that. Secondaries, it's a good place to be investing at this time because there's a lot of supply. And so that's creating an opportunity for investors in a variety of ways to implement and execute that strategy. And the next page is venture capital. And we have over there on the far right, 17.57. Again, we'll see that we're using the Russell 2000 as a baseline comparison because most of the companies that, both on the buyout and the venture and growth equities, are small cap companies. We'll broadly define that as under $5 billion in market cap. Everybody on board? Then the next section aggregates all of the investments that have been made. I'd ask that you turn to page 2.
So just to be clear, the first 2 pages are just assets that your firm sourced?
Yes.
Okay, and so it's covering, based on this, like 105 million compared to the whole portfolio is about 180?
Correct.
Okay.
So the next section, then in the buyout section, they're all there. I would say that you could take a little pen and you could draw a line below Adams Street and they're the 2009 vintage year back. We weren't here in 2009 to make those recommendations. They were Wilshire's. And then the rest of the investments, while some are not ours, nonetheless, that's the roll-up of the buyouts. And, 10.77 is disappointing, but it's being dragged down by these older funds from Adams Street that have been around for a long time, haven't gone full cycle, and have generally had, disappointing returns. And there have been some that are disappointing within the lower half of that section too, but they still have a little bit of time to work their magic. And Accolade has been consistently a top performer there, the two funds there. Next page would be 3 above that. These were all funds that you saw previously. Nothing really here new to report. Let's see, page 4, next page. This again is all of them, but there's several that we are not responsible for. You say Draper Triangle and above, those 4, and then Magarac, that's a name change from Draper Triangle to Magarac, and they were already in the portfolio and we did not source that. So the returns there are also, disappointing compared to the ones that we sourced entirely. Let's see here. No need to go through every page, but we talked about distributions and so forth. Page 10 shows the total distributions for year to date of $9.7 million. The net distributions, I think that accounts for capital calls had to be made of $1.9 million. So the net distributions are 7.8. As Chris mentioned earlier, the market had been locked or frozen partly because of interest rates. That is changing. From direct conversations with managers that are in your portfolio, there's activity brewing, partly in anticipation of lower rates, but also because they want to, work through the valuation and get them sold at a fair price. They're trying obviously to benefit themselves in that they get a carried interest. So, but they find the right balance to do that fairly for both the investor and for their revenue. And I think they will succeed in doing that. And then those managers are seeing, there's sort of 2 tiers, those that are in the queue and those that are almost in the queue. And I think you'll be surprised, over the next 6 to 12 months as the distributions will definitely pick up. Because at this point, you have very few capital calls to be made because this is a pretty mature portfolio. And just as a reminder, these returns don't marry up with the returns in the other report on page 4, these are internal rate of returns, the others are time-weighted returns, and it's like oil and water, so they're truthful, what's in the other report, they just don't accurately reflect where we are at a point in time.
Are there any questions? Thank you.
You're welcome. Thank you all very much.
And next we have Perry Giovanelli from PFM.
Good afternoon. No report for you today. Just really wanted to take a moment to thank you for the time that we worked with you dating back to 2008. Back then you gave a small firm out of Philadelphia an opportunity, which we all know how we feel about the Flyers on this side of the state, so that was very generous of you. But with that, Janie, I've been working with the plan now for 8 years, and overall things have gone very well. The one thing I wanted to point out, since inception, the overall program return is 7.32%. So overall, staying up above 7% in a very unique, looking for emerging managers, it's a difficult thing, and so we're very proud of that. We hope that you're happy with that. Interestingly enough, prior to the 2022 downturn, we were over 8%. So overall, the plan, had stayed very well, and we're proud of what we've done for it. So thank you.
Thank you. And, last on the regular agenda, we have Brad Rigby from Acrisure, who's here with his Acrisure posse.
Rarely does an actuary get an ooh in excitement, so I appreciate that greatly.
Elect more actuaries.
I have a brief update for you in the materials. This is to reflect within certain metrics, primarily here, a solvency projection reflecting year-to-date financials through through June. And so I'll jump to page 3, where we show 4 different projections. I'm going to explain them individually because they do reflect what was requested of us, which is to illustrate the impact of earning less than 7 3/4, which is what has been built into our projections. And in this graph particularly, while we do calculate a lot of underlying liability numbers and items that are relevant that we have shown you at other times in various situations, this is specifically looking at the duration that the plan will have assets above 0 in order to pay benefits. As you mentioned earlier, Treasurer, in your opening comments, you've received a lot of questions of late regarding the health of the plan, and this is of primary interest, making sure that we do stay solvent. So I'm going to point first to our current scenario, which is the gold bar, 11% contribution rate per party, earning 7 3/4 annual return after reflecting an update through June. And we are on the pace of remaining solvent through 2042, and at that point during the year, first becoming unable to provide for the payment of benefits.
I'd add that payment of benefits out of plan assets.
Out of current
So, right,
plan
if the
assets.
county infuses money from elsewhere, then that would, I think, is required of the county. I don't know if that's a fair statement. Is that a fair statement? Brian's writing notes. This is sort of an aside, but the county's required to pay benefits as long as the county's in business. Is that a fair statement to make?
Yeah, the statute does have language that essentially, in the worst-case scenario, makes the county the backstop.
Okay, yeah, continue. Thanks.
Yes. Making the same comparison with just the changing the contribution rate, which over the last several years has been the primary metric we've used to try to adjust long-term health of the fund. Staying at the 7 3/4, I'll illustrate the purple line, which would show that each party, the contribution rate would need to be raised to 14.5% per party in order to make the plan solvent. So obviously that is material that's for illustration. That's not a proposal by all. Then jumping backwards to current contribution rate scenario, if the return expectation is lowered to 7% per year, which is much more in alignment with what we tend to see across more funds that have a longer term objective in mind. 7 3/4 is certainly more in the risk on posture, more of an aggressive bogey to have to hit year in and year out. But it only changes by a year sooner, the point at which we're projected to become insolvent. So it would at this point be 2041 if we're earning 7% only. And at that point, while it would require a higher contribution rate because we don't have investments providing as much future income in order to keep the plan solvent long-term, a 15.25% per party contribution rate would be necessary to remain solvent if the only fix were on the contribution side at a 7% annual return. And again, that's for illustration, certainly not a proposal. To illustrate the point a little bit more, if you look to page 4, I want to show you how the contribution rate compares to certain items that would result in an improvement in the relationship of assets to liability, so reducing unfunded liability. I'll start with the blue bars. Obviously, time's moving from left to right. The blue bars is what we call normal cost. That's the value of benefits earned in a year for work performed. So how does liabilities increase for the work that is being done during the course of the year? Got a small sliver there of expenses. These numbers are all, by the way, converted back to a percentage of payroll. So on average, roughly, long-term, normal cost, the value of benefits earned is a little under 10% of payroll. And then a little sliver for operating the plan, that's anything non-investment related expenses, maybe a quarter point. But then you can see the gold bar is interest on unfunded liabilities. So just as we think assets are going to grow at 7.75% a year, liabilities do too, as the benefit that you have to pay somebody a couple years down the road is now 1 year closer. It's 1 year less discounting, just like the value of a bond would grow for a year less of discounting, liabilities grow as well. So the spread between assets and liabilities is about 7.75% of liability. In total, the contribution rate would have to be about 33% in order to pay down unfunded liability in this coming year. And obviously, the combined contribution rate's at 22%. So the need for exceptional investment return to improve the plan health continues to get more difficult at 7.75% than it would be at 7%, especially in light of the news that Chris mentioned earlier, that the Fed dropped the rate by 50 basis points. So all of this is informational and an update to requests that you've made before. A point that I would make on the concept of dropping the discount rate from 7.75% down to 7% is that it does have an impact on the county CAFR and the information that we provide every year for reporting on the county's balance sheet, because the rules within the GASB are that we measure liabilities using the current rate, that's 7.75%, until such point as the plan becomes insolvent, and then we use a municipal bond index for the time period thereafter, discounting cash flows that happen in the future. So at 7%, now all of a sudden the liabilities are raised a little bit, and also for 1 year shorter, and then we use the index there. The difference isn't as material as we thought before going in and measuring it. It would result in liabilities going up by about 3 to 3.5%, and this is measured as of the end of 2023. So not a small impact, but not an overly significant one that should keep you from making a change should you decide you want to do this at some point in the near future. And again, this isn't necessarily anything that has to change your allocation in the plan assets. This is more of a reflection in how you make plans for how you're going to make sure that benefits and contributions relate to each other in a way that also reflects the risk you want to take.
And this is shown here as a percentage of payroll. Does somebody want to shout us out what the total contributions to the plan were last year? Do about 80. Sorry for on the fly.
It's about 85 to 90, so, yeah, I'd say that's roughly accurate. I have to go
About
back.
85 to 90,000?
Yeah, 85 to 90 million.
80.
I'd have to go back.
I definitely didn't mean thousand. Yeah, thank you. Okay, so like if we were looking at last year where the purple line hits at about, would have been 21%, we're saying that's about $85 to $90 million. Okay, thank you. Yeah. Any questions for Brad?
The schedule on page 3, Brad, that has your market value at a point in time, does that include anticipated future employees contributing? And is that still at that reduced figure that the last actuary, I believe that assumption changed, that we weren't going to get back to pre-pandemic levels? So this is still reflective of future employees, but at a reduced level than what had been seen prior to COVID.
That's a great question. Yes, this reflects what we call an open group projection, meaning as an employee retires or leaves the population for whatever the reason may be, they're replaced with a new employee of the system, of the county that gets into the retirement system, and then contributions come in on that employee's behalf as well. But Amy, you're exactly right. We do reflect a now more current and lower headcount than what we had assumed like 2021, 22, where we were going to get back to pre-COVID levels of employment. Yes. And that has had an impact on this.
May I ask a question? Brad, you're looking at 11% up at 11% all the way up to 14.5%, okay? Wouldn't you look at from 11% up to 12%, 13%? Why all the way up to 14.5%? Wouldn't you think that's pretty crazy to go that high? Normally, wouldn't you do that, 12%, 13%, the contribution rate?
Yes, and this is not the point in time where we're making a recommendation
know
on a
that. I
contribution
know that.
change. This is only to provide an illustration on the magnitude of what it takes to have a
go that
picture
high.
where we're long-term solvent, where contribution rate's the balancing item, the only solution that's really undertaken.
Okay.
There are certainly other solutions that can be a part of it, and stepping, should a contribution rate be the means that the board decides to take to solve this, then yes, certainly steps as opposed to a giant change of that magnitude would be the approach.
So what you're saying, in a perfect world, this is what it would take?
No, in the perfect world, it would take far less than this.
But is it fair to say, Brad, that you took your magic modeling software and you kept increasing the contribution number until you got to it saying, okay, it'll be funded forever
Right.
at this contribution
Right.
number? As like if you'd put in 12, you'd just see a line that crashes into the horizon
Yeah.
later. So he wanted to demonstrate.
Correct, that's
Yeah,
what I'm
okay.
asking. That,
We
right.
could certainly show you what the ultimate contribution rate would be if you took 1% a year for 5 years or whatever the
Right.
number is. But that, again, this is really just to illustrate the magnitude as opposed to try to make and develop a plan and a solution. Because I do think that you are considering plans that don't necessarily put the entire thing on the back of it being a contribution rate change.
All right, thank you.
Any other questions? Thank you.
My pleasure.
Is there any new business?
There's none.
Walt says no. Our next meeting will be held on October 17th at 2024 at 12 or 12:03 by the county clock. Can I have a motion to adjourn? Hearing a motion, hearing a second, all in favor of adjourning? Yeah.